Sunday, June 7th, a little before 6 in the morning. Before we kick this video off, I want to start by reading a statement. Investing and trading in the financial markets impose substantial risk to where one can lose all or more than the initial investment. The content provided by me are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright, let's get started pretty much. Let's figure out which platform we're going to use. I should have had this ready. Forgive me. Let's use my own one. Right, bear with me, give us a second to load up. Shouldn't take more than a few. Okay, before we get right into this, I just want to, we're going to be going over a few things. I'm not going to teach anyone how to trade, what am I using, or for the most part, how to get started. I am assuming by you reading or watching this video that you have a idea of how to trade or what to trade or whatever the case may be. However, if you are looking to where to get it starting from, there are many places to go to. What I can recommend to learn how to read a chart, if you're really interested in all these fancy indicators out there and all that good stuff, you can start with, these are both paid sites, meaning you have to put something up in order to get access to these sites. You can start with the chartpatterntrader.com, Ron Walker. He provides good insight. He does a daily recap every day. He has his own methods and methodology, right? But again, these are all paid sites. Knowledge is not free for the most part, right? So do understand it is an investment into your learning experience. Again, website is chartpatterntrader.com. There is no affiliation between him and I. I am also a subscriber to his content. But the one I really recommend, if you really have an interest into the futures trading, would be eminiaddict.com. Right. His real name is David Halsley. He will teach you how to trade, develop discipline within the futures market. And this is something a lot of people do not have. It's usually a fire when ready kind of attitude with a lot of people. They're just buying and selling and buying. And David Halsley, or should I just say E-mini Addict, he will teach you how to correctly wait and enter into a position. How to size a position. This is the creme of the crop. You can call this a hole in the wall, but let me tell you, this is where I started to build a book. And from here, the sky was the limit with this guy. And with E-mini Addict, there's a trading room that's open pretty much during market hours. There are two updates, one in the morning prior to the NYSE opening, and to review pretty much what happened in the Asia-European session, if anything did change, and then pretty much a market debrief right at the end of the NYSE close. Trading room is live. There are a bunch of old webinars. It's inside of here. I believe it's inside of here. Pretty much this is like your educational zone to get to understand, to learn how to trade, all the things that he will show you within here. Um, Again, we got the webinar room as far as or excuse me, should I say the trading room, which is open, I believe, from 9 o'clock on. Uh, Chat box to where you can interact with all the other members within the community. And market is closing. You still have 36 people online. Uh, so again, it's a good place. Again, it's at eminiaddict.com. Again, it is a fee-based subscription. And I, with my open heart, I believe this is very worth it for anybody who wants to learn futures trading. Right? Look, it's pretty much free for the first 7 days, and then $30 each month thereon. I believe it is well worth it. I mean, you can pretty much pay for a yearly subscription in a trade, literally in a trade. But again, those are for those who are interested. Only because I am not here to pretty much teach you how the methods how to trade. This was his job. I'm not gonna try to this was his bread and butter. I'm not here to teach it. And so let's move on. Okay. For today, we're gonna go over just 4 things: nat gas, bonds, the euro, and E-minis. Well, the S&P. Let's get started with nat gas, and I'll try to go as quickly as possible because I know people's times are very valuable. Right, nat gas I have not touched in a very long time. I mean, I participated in a little bit in this July to end of the year run back in 2013, but from there I stopped. This is a wild asset to trade, especially when it is moving, because when it moves, it does move. I just want to touch on this. I only, so often, usually on a per month basis, I will go over different assets, as a review for what happened for the month. And I looked at nat gas, and I passed this along to a few friends who are pretty much nat gas heads. They love nat gas, and honestly, for the most of this year, as you see, nat gas pretty much traded at a nice choppy sideways range. So little to say, there's really nothing much to do with nat gas. One thing I can say is nat gas did break a short, right? Depending on which way you did draw it, which the right way was from, I believe, this low. Right, you can still see that it's in shorts. Right. However, if you are measuring from, I believe, what's this leg now? From this leg down, this broke. All right, so you can draw it from different ways. However, the main extension is still holding. All right, it's still in shorts with targets down at the 217s, 218s roughly. Right, you see it right here, 217.4. Okay, if it goes there, not sure. And again, I really don't trade nat gas often. The only thing that struck me as odd, and this is happening a lot lately with these old gotcha trades. All right, from the April lows, 2012, until the July highs. First, let's get rid of this. Again, from April 2012 lows to July 2012 highs. We're pretty much trading old support. This old support to where originally this started off the first traditional leg, and then from there we had nothing but measure moves up. I mean, again, that gas was pretty much phenomenal. It was a great trade as it was trending. For you nat gas heads, this may be something to really pay attention to, and I'm gonna say the next month or two. I'm not sure how long this will take to develop, but as you can see now, this long is trading, right? It still has to break a short, of which I do not believe it has broken yet. And if you really want to look at it from the 650 highs, pretty much from 2014 highs to lows now, we still have a long way to break the short. And by then, the move is done. So I would not advise anyone to start getting long at minimum nat gas futures, NG, QG. And if I was to get long nat gas futures, I would use QG, which is just a smaller contract, if I'm not mistaken. Oh, excuse me, not QG. I typed in QC. QG. Right. It's pretty much the same thing as nat gas, but it's I like the how can you say the margin requirements for QG and then the tick size equivalents versus NG. QG is one of the ones where it's better to trade QG instead of the bigger contract NG. NG I just use for charting purposes. Excuse me, NQ and G. All right, so again, something to pay attention to if you are, for whatever reason, bullish nat gas. Until we identify correct anchors to draw from, and until they break short setups, I would advise you to use UNG, pretty much just the ETF for nat gas, and this would be a lot more, let's just say, financially accommodated as far as to, I'd rather be trading this instead of the futures, or if you're investing, whatever your thesis is, UNG instead of futures. Right, again, let's go back. This is pretty much this long is valid. This is an old long. Right, again, it's like an AHA trade. Bullish above, 243s. Yeah, let's get this right number. Let's get this number correct. Yeah, 243s. Right, so I would not be trading the futures. I would rather be trading UNG. I think it would be more wise to be trading the ETF instead of the futures, at least until we get some kind of resolution in this area. Nothing to do really with nat gas, but I know a lot of people ask me to look at nat gas and well, my opinion of it. There you go. This is it right here. Right. You have a nice little risk range, and yes, it is currently trading that long. Something to watch. Bonds. Let's go to bonds. Now for this, I want to open up two windows, which I think I already have it open. Okay, good. So I'll link this one. This one I want to put TLT. Okay. This has been a hot topic as far as bonds this year. It's always been, a big topic. One that I pretty much I stay out the whole fundamental reasonings behind everything. I feel like the fundamentals do not make me a penny. I'm not an economist. I'm not a money talking head on CNBC. So again, the fundamentals behind anything, for that matter, I stay away from. There's nothing to do for me about it. Right, real quick, let's focus on GB before we go into TLT. Right. Make sure I got my anchors right. October 2013. Just really comes up as December. So it's just about the same. Let's use this December leg, or actually it comes up as I'm looking up here to get my date. Yeah, December 31st, you can say roughly. December 1st, January 1st, whatever, same thing. All right, let's use that low, the 127. Let's get it exact. and it was December 31st. That low was 127.23. Okay, so the 127.23 to the 166.27. All right, we're gonna get it in the ball. Oh, okay, we got 20. Man, I need to snap it. Okay, I snapped 120, 166.29. I'm 2 ticks off. All right, but for the most part, we're in the ballpark. Bonds over the last 3 months, 2 months, I've just pretty much just got whacked. Right, this gap up to where it really frightened the crap out about a lot of people. Have honestly, it's pretty much coming back into a long. I see that obviously to the naked eye, yes, it has gotten whacked, but again, from that December 2013 low until these 2015 highs, we're coming back into support. Honestly, I expect it to bounce. I don't see nothing bearish about this chart. Contrary to what everybody else's opinion is about it, it's coming into a long with targets up at the 176s. And that's a major trade. You're talking about well over, if I'm not mistaken, 1,600. I'm not going to do the math right now, but it's a long way up. What do you have to look forward to in the coming days? Just see if the long trade, how it reacts. Bonds does have a tendency to dip in and actually come into halfway of the risk range. So pretty much you'll be looking for about 144. No guarantee, but pretty much about the 144, 145. Okay, so just see how it handles in the next coming days. You have equities just finally taking short, so I wouldn't be surprised if equities bounce and this starts to bounce, and then finally it'll start to trade back into support. All right, so pretty much I would say bullish above 142.22. Anything above that is fair game, and again, targets up at the 176.04. It's a long ways away. Now, everybody's saying that rates are starting to go up. I don't think so. I think rates are still trending lower, and eventually we'll even have negative rates. What does that say about the economy going forward? I have no idea. But I know, as we talked about in our last video, as far as the dollar is coming up into a big resistance level from. It's just real quick. I know this is off topic. Let's get rid of all these drawings. I can always draw that up. Let's go out into a longer time frame. Again, the dollar is coming up into a huge short. Targets all the way below at the sub 60s. Right? I mean, this is a scary looking chart. And what this is telling me is pretty much people are buying the rumor and they're already selling the news. You know, the dollar is rallying off of this rate hike, right? That's supposed to happen soon. You know, the Fed's supposed to hike rates. I believe this is calling a bluff. I mean, especially if the dollar really trades lower. You know, they started buying the rumor well before. Remember July last year? Oh, the dollar's going to crash. Huh? When the dollar was going to crash, I was buying the dollar because we had broke out of a nice range, and you only had one pullback, and that was right in September. You had one pullback, and from there it was just a face rip, and there was no other way you could have gotten into this long. No other way. There was no other way, unless you're just buying it and just hoping and praying. There was no other way you got into this trade. This was your only pullback, and When I see something that does not have a pullback, I really, my gut is telling me something is wrong with this trade. It's everything should have a pullback in whatever matter. This was the first time in July. This was the first halfway back that held. That was your first one that held. And I was buying that hands open right before July. Remember the July 4th, the dollar collapse? That never happened. In fact, it rallied. This is huge. And I know around the soon on this candle, I closed up all. I mean, I wasn't getting the top. Definitely didn't. But as it came up into this resistance, I know better. Close my dollar long. We started closing already. We didn't go up into the hundreds. I missed everything from 96s up. It is what it is, but I'm glad I did because this is just telling me that this is resistance. And until the dollar clears 102s, 102.16, again, the dollar has targets all the way at the 60s. And that implies a big move in these markets. And somebody knows something. Sorry I got off topic with that. Let's go right back real quick. Right. People are really fascinated with TLT. And if this is the same anchor, this December low, 2013, right? I'm going to use the same anchor right here. As you can see, pretty much as I highlighted, it's showing you right in that area. So, same anchor. I believe TLT is already trading its support. Recognize the difference is 30-year. TLT is a 20-year. All right, so I wouldn't be surprised if TLT actually dips in and breaks this setup. Don't know if that's going to happen, but for everybody interested in TLT who uses TLT as their trading vehicle, I would be watching ZB and see how it handles this area before you get long TLT. Right, but again, TLT bullish above 115.40. Bullish above, bearish below. Let's move on. I'm going to close this one up and move on to the next one. The euro. And before we start off on the euro, just want to say congratulations to everybody spanking the euro. Right, this is going to be the trade in the next 2 years. Again, I really believe commodities and bonds are really where people need to be, and not in equities. This is where movement is going to happen big time. All right, I'm not going to draw up resistance. There's only really one set of resistance. There's two, but I just want to say there's only one major resistance, and that's all the way halfway back. All right, coming from the May highs down to the lows. And that resistance is pretty much the 126s, 127s. Until we get there, this is not in play right now. That's why I said I don't want to talk about it, because it's just a waste of time. But pretty much this is your only real resistance right now. Okay, let's get rid of this and go on to it. Let's do a slight review real quick on the euro. This was the only other resistance until we had broken it from the lows of January 26th this year to the lows of 104s. All right. This resistance was broken on March, and from there we had pretty much a sideways mess. And I remember when I was taking shorts off this level, and until I didn't notice that level, there was only other one level, and that was here. So I assumed, let's get rid of this one. I assumed that this trade was still valid. So I had shorted it, and then what I did, I took a step back, and I drew the next measured move, which should have been the original. I drew from the 115.44 to lows. So I thought everything was good and gravy, and I kept shorting these 110s. And it worked out. It did work out, especially if you was nimble and peeling some off. It did work in your favor. Um, with the help of others, I did notice that again. Once one had broke, once this had broke, that move was pretty much done. And being that even if you were still drawing from there, you knew you was wrong on this candle right here. So in hindsight, let's still draw from this high to low. And again, this was broken on the 29th of April. So immediately from there, you draw support low to the one that broke, right? This is the reason why I like to use this anchor, this April 13th anchor, two highs. And I will use the high as the May 1st candle. Right, before I snap this drawing, I just want to stop. The reason why I use this anchor and not this low anchor all the way halfway back, I will not use these lows until we break this resistance. And then we will use the all the way halfway back low to whatever is the candle that breaks this one initially. I will not use that anchor until then. The reason being, if you try to use this anchor and drew it as it was happening to this high, well, you had a sloppy mess and it broke. There was nobody home. It did not defend. It broke again. Right? So we were still, you can say, technically in shorts. Right? This is the reason why I do not draw from that anchor. I understand you draw from low to high, but again, until we break that resistance up above, I'm going to use this anchor that broke the short and that proceeded from the April 13th lows. All right, one more time. Let's snap it this time. From April 13th lows to the May 1st highs. This red candle right there. Can you see it? That little red one. That's the high I'm drawing to. See that pretty picture? All right. The euro, I'm not this has been a crazy market. You'll notice things didn't trade a pullback, but traded right to profit target. This, when that happened, you don't get caught in the hype. You're fine. You got long. When we start to trade the profit targets before, I start to look for another short. Or if anything, there's something happening here. If anything, what I did, I waited again for the pullback. Wait for the pullback again. And we traded this pullback on the 27th of May. And we went right to the tick. And it was a perfect trade. And I had no choice but to get long in. And again, to everybody who got long that day and heeded to my advice on it, it's not a short, it's a long, you made some serious money already. Right, so going forward, okay, let's look at the 15-minute chart. That's how this looks. If this was its original, it's what you're seeing on the daily. I'll draw up two just so you can see both of them. Oh, Jesus. Let's put this back to a daily. Okay, there you go. So you just, have an idea what's going on. Right, when we traded down into this, and it was, again, had to buy it, went sideways for a little while, you had nothing but measure mode up. This was its initial one. That was your pullback there. Oh, what happened from there? As you look back, you start to forget different anchors. This was your second pullback. And then right from there, you went straight up in extensions. This being an anchor. I'm not going to get into the whys, but pretty much I was taking my anchor from here. High to highs, traded, then broke. Right. Then pretty much you're just waiting for your next pullback. Where is your pullback? Where did I draw that from? Was it from the lows of Monday? Yeah, I think it was Monday's lows. No, it was not. See, this is what happened. No, yeah, right from the lows that traded. Excuse me, right from the 108.21. Excuse me, from the 108.21's two highs to 113. This was the pullback, and this just traded on Monday morning. As a matter of fact, I think I had sent out a tweet at it's a buy. Target's up at the 115s. Have to forgive me, man. My memory is terrible. And again, this is why I should always write things down. Always. All these numbers. Again, target's up at the 115s. Another from 111, that's 400 pips. That's per contract, you're looking at $5,000. So do what you want with it, but the euro is a long. Bullish above, bearish below, 110s, 37s. The 110s, 37s. Let's move on. The ES. All right. This, I want to give us a small review, not too much, but just a decent review. This has been my only headache, equities, right? I'd like to end the equities. I like to stay one way, and which for the most part I've been long and bullish equities until January of this year. We're running extensions from the 2007 highs, two highs, 2134s. Okay, we're just gonna hide this for right now. All right, but we'll talk about that later. All right, but one more time. Let's draw this up again because this was our original from 2007 highs to the September 2014 highs. Right. October was your pullback into a long. Right. From October, lows to highs. Geez, where am I drawing that from? I just want to make sure I have this correct. I don't want to draw which ones that I'm not. Matter of fact, let's not even draw that. Because I don't want to confuse anybody right now. All right. Pretty much from the 2007 highs to 2007 highs to September 2014 highs, we traded support down at the 1820s. I forgot what it was. This says it was 1820. So it was 1813. It says. All right, so we traded support, and pretty much we used nothing but a lift off from there. Originally, when we went again from highs to highs again, and this broke, the only idea that I had in my brain was the rally is over, only because we went and hit profit targets. We went and hit profit targets. We traded them exactly. And this is why we've been going straight sideways. Right? And this chart is a weekly chart. That's another reason why I'm drawing incorrectly. But this is the reason why we've been going straight sideways. And if you remember my last video, we've been going straight sideways. Um, People are getting out of their longs up here. Right? They are taking profits. It's happening for a reason. And yet all this is doing is collecting longs. Collecting all these longs up here. And until the rug gets pulled, it's people are getting out of their longs. They're taking profits and, if anything, getting short. When do I believe the short will happen or take place? It already had happened. And if you look at my last video, 2134 was the profit target, right? And that was drawn. How did we get the 2134? Let's see. I don't have it written down with me now, but how do we get it? What anchor was it? Here it is. It had to be this one. Yeah, these are all the same, so we draw from the same ones. I'll give you 2144s. This was the May lows. Is this doing weekly? Let me back up for a second. How did we get the 2134s? It had to be from there. There's no other way to call it. I know we had broken. It's a funny looking chart, I tell you. It's been nothing but sloppy up here, and it's something that, again, since January, it's been pretty much something to stay away from. And I'm glad pretty much I've been really just staying away. I'll probably set up another video as I pretty much review all of my old charts, because I do have a lot of drawings that I have to go over. I mean, if I put up this chart, it's probably a mess. Yeah, of course, it's a mess. That's how I get rid of all these again. All right, to not waste any more time, let's just from the May lows, May 6th, May 7th lows to highs to 2134s. On Friday, we broke again. This is the reason why I wanted to make a video now. This mouse is really killing me. On Friday, we broke again. All right. I'm not too sure of how long this trend sideways is going to happen. All right. I can only make an assumption that pretty much the M5 contract has another 12 days left. It's the active contract, but this has 12 days left. So it's about roughly, I have my calendar here. 12 days, so this is 7, 14, 13, 12, basically next Friday, not this upcoming, but the next one, the 19th, I'm guessing. I guess that'll be the last trading day of that contract. If I was to guess on any downside, it would start from there. Or pretty much I would guess when the week before, when the U5 contract has a lot more volume coming in. Because as you see right now, the M5 is still doing 1.5 million, and this is not even doing nowhere near it. So it's either going to be either or. When this starts doing close to the volume of that contract, or when this contract is officially over and inactive, that's when the selling pressure should begin. I still am in the belief that this is the top of the market. I still believe that. There wasn't an initial target, I believe, at the 55s or 50 something. Yeah, 51s. If you're measuring from January's lows to February's highs, and you can still make a case that those are trading, right? That those have defended, right? And those are still legit, right? We still have targets up at the 2151s. So again, it's a big clusterfuck. There's no other way to say it, right? If we trade up to there, I have no idea. Let's see what happens. But I just know from Friday's lows, from May 7th lows to the 2134, those time highs, we broke on Friday. And what you can expect from here is now we will go one more time all the way halfway back short. What does that mean? Let's bring it up on a 15-minute. From the 2134s down to the lows, my best guess is before this week is over, or this upcoming week, that we will trade back up into this level, right? Probably even dig in, right? I don't know if we would trade above 2114 halves, but just say that I'll probably be looking at this next week and probably trying to take a short off of it, 2108s, 2108 halves. And that next measured move is down at the 2071s. We'll see going forward. But in my heart, I believe this market is pretty much, it's setting up for a nice fall. Let's go back one more time to the daily chart. Let's erase all of this from, weekly chart. So these 2007 highs to all-time highs at the 2134s. This is your next main, and this is your primary line of support right here. Now, there is no other support down below. I don't care what any other level anybody gives you. This is your main support. And yes, I wouldn't mind taking a long down in this area. However, sell in May and go away is very alive. It's very alive. We're in June now. What day did the 2134s trade? May 19th. The cash index made a high. May 20th. That was the high of the market. That was the high of the market. So May 19th, May 20th, that was right before Memorial Day. Sell in May and go away. From there, it's been nothing but lower highs and lower lows. So believe what you want to believe, but I know I'm not wrong. We'll see what happens from here on. But again, this will be a nice buying spot. And I believe this will be trading right around on or before Labor Day of this year. I'm going to repeat, I believe this level will be trading on or before Labor Day of this year. If this holds, remains to be seen. But I just want to make a quick statement. if we was to start trending down towards this area, you better hope that this level does trade, meaning that we do touch this level or slightly dip in and not do this. Come very short off of it, meaning that you want this level to trade. You want the long to trade. Because if it doesn't, you're only going to dead cat bounce up into another short. And then probably just come right back down and break it. And that implies a lot. I mean, I'd rather it be all nice and sweet and we all have good dreams and stuff like that. But honestly, I don't know if that's likely to happen this time. It's a lot of opinions going around as to what's going to happen. But I follow these. Let's just see when it gets down here, down at the 1861. Let's just hope those trade. We don't break below and we don't front run it by a lot, because we'll wind up coming into a bigger correction than that. Let's hide over this real quick, or at least just delete them. Is it a 440 lows, if I'm not mistaken? It's just about. Right, yeah, the 440 lows down here. Up to all-time highs. If those if these 18s don't hold, if this extension does not hold, again, measured from 2007 highs to highs, if that does not hold, we are going right back down into these low 1000s, into all the way halfway back long, measured from the 440s. I believe the cash index XPX back in 1932, the low was $4.40, measured to the all-time highs. We're likely to trade back down there if 1800s do not hold. So long ways way away, and it's really nothing to talk about. It's just nothing but pure speculation. But again, when we get down there, it'll be something to talk about. So then we just trade safe. Okay, the only other last thing, real quick, I just want to touch on is, I know a lot of people, they ask me, is there any indicator that I use on charts? And in short, it's no. I pretty much use fibs, and that is all. Right? So fibs, they give me risk reward. They give me support, resistance, and exit and entries. That's pretty much an all-in-one tool, and that's pretty much all I use. If I'm using anything else, it's probably only because I don't have access to a trading platform. I'm mobile. I'm running around, and I would use Ichimoku on the phone. I would sometimes use a preferably an SMI or stochastics momentum index, but for the most part, no, I do not use anything else. With that said, the only other things I just want to quickly show is the summation index for weekly. Right. I usually have this saved onto what I like to look at, but pretty much first off is the Nasdaq summation index, coupled with a full stochastics 533 parameter. I put it in the background, and these will give you an idea of trending moves, and you can pretty much see the stochastics in the background behind price. Well, in this case, price is summation index. This is the NASDAQ summation index with a 533 stochastics parameter in the background. And this would give you a nice idea of trend within the market. And you can see the October bottom, November slightly low trough, rip back up, rip back down, February bottom, the March top. This will give you an idea of direction in the market. And it is very, I don't want to say, I mean, I wouldn't take trades off of it, but just to give you an idea of the way the wind is blowing. Right? As far as the NASDAQ, I do the same thing for the NYSE. Right? Pretty much put the S&P in the chart below. Same kind of setup in the background. Same idea, pretty much. Right? So as you can see, pretty much we have bearish conditions. Right? Usually we can stay oversold or overbought for extended periods of time, but for the most part we're trending lower. And this is something just to keep an eye on. I mean, you as well can do the same thing. Again, it's NYSE, NYSI, $ beforehand, or NYSE. Again, I'll just go back one more time so you can see it. Right, again, NASDAQ summation index, NYSE, NASI. I do pay attention to the crosses, but I do, in most parts, pay attention to the context in which those crosses are occurring. Right? So I believe we do have a lot of downside ahead of us. To say the least, it's not looking good. The only fundamental aspect that I pay attention to in these markets only is margin debt. You can get that. You can just type in, do a Google search for NYSE data, and you'll find it. It's somewhere they have a whole bunch of tabs and whatnot. Or just type in margin data, and pretty much this will show you how many people or institutions or whatnot are using margin to fund their speculations. And we had originally top margin debt back in, if I'm not mistaken, it was over in February of last year. For no, excuse me, I'm wrong. I'm very wrong. No, yeah, it was February. February, $465 million. Yeah, I may be saying that wrong because this is in millions. But this is just showing you that how many people are using that to fund their speculation. And it's very interesting. It's something I pay attention to. I do not trade off of it. But originally, again, this was basically saying that the market, this usually move in sync with the markets. And we had a high last year in February, and it has only finally been overcome this March. Right. This information will come out usually months. And basically, right now, you're only seeing, we're in June right now, but you're not getting May data. May data will be released once, I guess, June is over. So you're getting it like a month beforehand. And this is basically saying that this is validating the new highs in the market. This is something that I do watch out for. But again, we're in nosebleed territories. We're putting in substantial highs, never seen before. And something to pay attention to. So to answer, I forgot who it was, the question is what other kind of data do I look at? This is just about it. And it's nothing that I make a trading decision based off of. Again, with that said, guys, have a good weekend and have a good week in the markets.